0 and the 4.4, giving us, of course, the 4.4. I'm going to make this large now and take a look at the journal entry. So if we have the journal entry, we're thinking about this side of the journal entry, meaning the cost of the goods sold. But of course, we sold stuff too, so we need to think about also the sale of the inventory. We sold 420 units at $85. If we sell something, we either got cash or AR, so I'm going to debit accounts receivable in this case. 4 equals 420 units times $85. Notice that has nothing to do with our worksheet because we're working on the cost of the inventory. The credit is going to be the same as, say, negative of that number. And then if I post that, then I can go over to accounts receivable in Z12 equals the receivable is going to go up. And then we can go to the sales down here. Sales, here's net income. Right now it's actually a loss at this point, equals the 35. So sales is going to increase to 24,980. Now it's also going to have to go down by the cost of the stuff that we sold. So how much is inventory here going to go down by? It goes down by the sum of these two. The cost of goods sold is what we are calculating in this column. So cost of goods sold. So if we post that, then what happens? Cost of goods sold here, that's the cost of the goods we gave up in order to generate that revenue. Net income is going to go down. So it went up by 35, down by 22, and the net of those two is what we earned, being 13.1 in this case. Then inventory, something's in it. I'm going to double click on it, go to the end of it, plus, then point to the inventory. That's a debit, that's a credit. Inventory is going to go down. What's it go down to? Goes down to what our worksheet has. That's what we're trying to get it down to, so that matches out. Going to take this, going to snap it back over here. We're going to move on to the next item, which is March 18th. So 3/18, we had a purchase of 420 units. So I'm in the purchases column, 420 units. How much did those cost? 60. So again, inflation or whatever, price is going up. Therefore, we're going to say this equals the 120 times 60 gives us the 7200. Now, if we look at our layers here, we could list the 3 layers because this one's 0. I'm just going to list the 2 layers because this one's gone now. So we have this layer here. So I'm going to bring that down. As of this date, what do we have in ending inventory? We still have these 80 units at 55. So I'm going to highlight those, copy those, and then I'm going to right click and I'm going to put it in this date line, paste it 1, 2, 3. We still have those 80 units at 55, and now we have another 120 units. So I'm going to copy these. And I'm going to put those in our ending inventory line, paste it 1, 2, 3. Then I'm going to sum these up. So we have this units and these units. So I'm going to say that equals the sum in terms of dollars, 4.4 plus the 7.2, giving us the 11.6. If I make this large and then post a journal entry, we purchased 7.2 units. So another 7.2, and I'm going to assume we purchased them on account. So inventory is it's a debit balance. We're going to make it go up by debiting it. I'm going to double click, go to the end of it, plus this 7.2, making inventory go up to 11.6. There's our 11.6. We bought it on account, I'm assuming, so that's a liability. Plus, we're going to have it go up to the 41. So we're just paying it on account. No, we're going to have to pay off the vendor at some point, but I'm going to take this, pull this to the left again. So now we've got 325. So I'm going to go to the next line here. So on 325, we had purchased 200 units at $62. So now we're going to purchase another 200 units at $62. So again, inflation or whatever, price is increasing. 200 times 62, an inventory that we purchased. And now if we look at our ending inventory, we have a couple layers. Here's where we were as of last time in ending inventory. We had these 2 layers. So we had 80 units at 55, 120 at 60. I'm just going to copy those 2 layers, and I'm going to put them right down here under this date line. Right click, paste them 1, 2, 3, values only. And then I'm going to say now we got another 200 units at 62. So I'm going to copy that, put it right under there, right click, paste it 1, 2, 3. What do we have now in terms of total dollars? These are our total dollars. So I'm going to equals the sum of these 3 items that are now in ending inventory. We have ending inventory valued at 21,000. I'm going to make it large, take a look at the journal entry. We're going to increase inventory by that purchase amount, 12.4. Credit 12.4. I'm assuming we bought it on account again. Again, our vendor's going to want to get paid soon, but I'm going to double click on the inventory, go to the end of it, plus 12.4, enter, goes up to 24, that matches our ending inventory. Then I'm going to double click the accounts payable, plus, and that's going up by the 12.4 that we're assuming we're going to pay at a later time. So I'm going to take this, I'm going to snap it to the right again, then we'll take a look at the next line, which now is on here, on 325, and, I'm sorry, on 329, it says we sold 160 units at $95. Once again, that's the sales price. Remember, we purchased it for something around $50 to $62. So that's the sales price. Now, it's not in the purchase column. We're going to go to the cost of goods sold column, and it's not the sales column. This is the cost of what we sold. So this isn't the 95. This is the cost of what we sold. So we sold 160 units then. The question then is, which units did we sell? Under FIFO, we assume we sold the oldest units. So we're assuming we sold these 80 units first, and then the 120 units, and then we're going to cut into the 200 units. So we sold 160 of them. That's going to wipe out the 80. So we're going to say the 80 is going to be gone. We're going to sell all of those, and those cost $55. So this times that is 55. If we take a look at the calculator, we sold 160 minus 80, that means we have another 80 to sell of these 120. So that means that we're going to sell 80 of the 120, the next layer there. So we're going to say 80 times of these 120, and those are $60 a unit. So 80 times 60. So now we need to know what happens to ending inventory. What is left? Well, this layer got wiped out. 80 of these are gone. This layer is still there, according to this information. So how can we represent that? How can we represent this being gone? Well, we can say this equals the 80 minus the 80. That's how many we sold at $55. Of course, the 0 times 55 is 0. And then of this layer, the next layer down, we're saying we had 120, and we sold minus 80 of them, tab. So, and those are at $60. So we have 40 units left at $60, or 24, and then we didn't sell any of these units. These units are still there. So we have the 200 units, and we didn't sell any of those. Those are still there at $62. And so if we multiply that out, then we have this 12.4. Then if we sum these up, again, we're on this date line. I'm summing up these items in total dollars equals the sum of these, and enter. So now we're at 14.8. So if I make this large now and then post this out, remember we made another sale here. So what was the sales price? $95, 160 units. So this equals 95 times 160. And note that has nothing really to do with this worksheet because the sales price is distinct from the cost. So we're going to say that income went up by 15.2 in this case. And if we posted that out, then we would go to we're going to go to accounts receivable. I'm going to double click on that, go to the end of it, and plus, and point to the receivable. And that's going to make the receivable go up. People owe us more money. Then we're going to go to revenue down here. I'm going to double click on that, go to the end of it, plus, that's a credit. This is a credit. It's going to make the credit go up in the credit direction. Brings revenue up. So remember, this means that credits are beating the debits. Income is greater than the expenses in the credit direction. And then we got the cost of goods sold. That's what we calculated here. The cost of the merchandise we sold. That's these two. That's the total cost. So I'm going to say this equals the sum of these two. Enter. So it cost us 9.2. Inventory needs to go down by 9.2. The cost of the goods that we sold needs to be increased by 9.2. So if we double click on the cost of goods sold, go to the end of it, and plus, then I point to this item here, that's going to bring net income down. Then we're going to go to inventory. It has a debit balance. We're going to credit it, making it go down. I'm going to double click on it, go to the end of it, plus, and I'm going to credit that, making it go down and putting us back in balance here. Now we can see that we're at 14.8. That should tie out to our worksheet here, 14.8 in ending inventory.